Hey, coin traders, going to look at Ethereum right now as we do head into the daily close in a couple of minutes here. So been a little bit more of a sell-off after a little bit of a consolidation and continuation pattern. Now, if we look at Bitcoin, we are looking at a little bit more of a stabilization, consolidation, and continuation pattern. And typically when we do check out dominance, for example, one of the things that we actually see out of dominance is that you can see this chart, very continuous upside. And typically what we expect is that when Bitcoin starts to consolidate, that's pretty much when we see the alts have their chance to rise, which does mean that that's when we see that retracement. And this dominance is still going to need that retracement at some point. It's just whether or not that happens here anytime, because the alts actually had an extremely nice opportunity over the weekend to see that nice rally as Bitcoin was consolidating in a longer flag type pattern. So let's go ahead and look at Bitcoin, for example, once again. And then if we flip over to the 1 hour, you can see that this whole period over the weekend was when we did expect alts just to make their move, but we did get pretty much stagnation out of it, which is why dominance continued to rise as well. And now in this consolidation period again, but yet alts are actually starting to pull back. So that's why we have seen dominance continue to rise here. But overall, let's talk about Ethereum, because I think that is going to be the big name when we look at altcoins right now. So this is going to be one of the big things that we look at. So starting off over on the day, now, little bit of a bullish sign that we broke this huge level right around 1720. And now we are looking like we're heading back to backtest that level once again. So let's go ahead and draw a price level there. And you can see that we're pretty much not too far from this overall edge, especially after getting a little bit of rejection right at the $1,800 level. So if we zoom out now, you can see that we've got several key critical levels right around this overall zone. So we know that 1800 is going to be another big one, which was effectively a little bit of that double top point that we've looked at before. But this whole zone has been supportive before. It has been resistive, and then all the way down to several lower support points that we're going to be looking at. We know that there's an extremely strong level of support just based on previous trading volumes from this overall pattern before we had the recent pullback on the 10th of March here. And so now I want to actually flip over and talk about a couple things that I posted on Twitter. And just a reminder, make sure to drop me a follow at @coin_trades is the handle over there. I do post plenty of updates more regularly than on the channel. And we do have a lot of great discussions and just kind of quick little announcements. So for example, the FOMC meeting is going to be on a Wednesday, or the announcement rather, about kind of the overall inflation rates. Now we have gotten a lot of uncertainty overall. And that's why typically when we see FOMC meeting announcements come out, we might get 70, 80, 90% predicting a certain level, which kind of is what creates a little bit more stability. But this is one of the ones where we actually have kind of an evenly rocked boat, and there's not really a lot of confidence in either direction. So that's what creates that overall volatility when we do see these type of announcements. So typically we do get a lot of things priced in, and when things go one direction or the other, it's not necessarily as big of a move as when we do have a lot of uncertainty and questioning on what the actual outcome is going to be. Now, in addition to that, one other factor that we are looking at that I made a tweet about is that the world has never been more in debt and facing more financial turmoil than it has been today. And not just specifically today, but in the overall present financial space. And so you know that this is definitely a financial crisis, because another tweet I made talked about how President Biden actually recently asked for the advice from Warren Buffett about how to handle this overall economy. And overall, this is the worst financial crisis since Lehman Brothers back in 2008 and the 2009 crisis. So a lot of bad things going on right now in the overall financial sector. And we know that crypto is extremely high risk, but we have seen a lot of funds flow into some of those type assets like precious metals and whatnot. So we definitely have more of a driving force, as we do get a lot more distrust from the overall financial space and banks. And so although we did have an extreme correlation between the stock market earlier, we know that now we might be getting a little bit of that disconnection where we're actually seeing a great use case and a lot of attention start flowing into crypto. So once again, make sure to drop me a follow over on Twitter, and look forward to chatting with everyone over there. So now let's actually look at this 4-hour chart first, because I think right now it is going to be one of the most relevant. So you can see that in the current, we actually have a little bit of this falling support line that was previous resistance. So if we do continue to hold and maintain that level, that could be one of the best bullish case scenarios, especially if we do maintain support on top of these exponential moving averages, despite the fact that we do have the 12 starting to roll over now, as we do have this little bit of pullback and retracement that we have seen across crypto today. Now, on this way up, we were looking at the 26 as being a big, nice point of support, especially since it was resistance and resistance on this move earlier. So the fact that now we have dropped below it means reliance on the 50-period EMA, which isn't necessarily the best sign, since as you can see, looking left, we haven't necessarily seen it as that many tests of support or resistance previously. So I'm not necessarily counting on it being that much of a supportive level on this next attempt, especially as we do anticipate a little bit more slippage from Bitcoin. And so that's really been one of the biggest impact things, is that Bitcoin's rallied, yet altcoins haven't necessarily rallied as much. Bitcoin starts to pull back slightly, and then altcoins start to dump even more. So that's another one of the reasons why dominance just has been overall exploding for Bitcoin. And as you can see, we did just close the recent daily candle. So we are going to look now at what happens on the longer term. So if we do look at daily, for example, we did talk about the support right around 17,000 or 1,720 or 25, depending on how you look at it. But also we do have on this daily the exponential moving averages that could roll up. So ideally, we'd love to see a little bit more of a consolidation and even a bull flag type pattern, as we do hold not only this price level support, but as well as the exponential moving average support, and then also this sloping downtrend line of support as well. If that does happen, that would be one of the best bullish cases, and we could see greater continuation to the upside if, in fact, we do hold 1,720. And in addition to that, if we do get Bitcoin to continue to see upside moves as well. But we do know that longer term, we are going to be expecting a little bit more of that consolidation and continuation pattern, since we have gotten extended on Bitcoin on some of the longer time frames. So now looking at this daily time frame as well, we do want to point out the next lowest level of support right at 1680. So that's going to be one of the lines if in fact we do see 1720 break. So this overall zone should just be extremely supportive. And like we talked about, ideally this would be our great opportunity to see a lot more stabilization holding this overall zone, especially since it was such big resistance. And like we've always talked about, this is the reason why we like seeing zones of resistance, because then once we do break it, it does end up providing a zone of support. So that does mean that if we actually slip and break below this big massive zone, that's going to be a pretty bearish signal, and then likely it will turn back into resistance, and we're going to be seeing a lot lower lows in price. So the zone from 1680 to 1720 is going to be one of our big key targets that we need to hold for the bulls in order to see a continuation and continued move to the upside, especially since Ethereum is kind of one of the drivers and leading indicators of what the rest of the altcoin space is going to look like. Now, I do still think that we're going to see our time for alts, and the reason is that when we talk about things like decentralized finance, which is really going to help have an impact on this overall economy if we do get a complete lack of confidence for the overall banking system, that's what's really going to end up propelling a lot of these layer 1 smart contract chains, and even some of the layer 2s as well. So we know that that's a really strong driving use case to see a lot of money flowing into the alts, since there is more of an impact for overall finance compared to Bitcoin, where we're just looking to essentially have that means of financial value and the quote-unquote store of value as well, especially having a little bit more of that trust, especially since it is the biggest name in crypto. But still got the overall broadening wedge on the longer-term time frame, so we know that this is also that continuation pattern that we have seen. Bitcoin did break bullish from this pattern, though, so we could still expect to see that out of Ethereum, especially if we do hold 1720 down to about 1680 for that zone of support. In that instance, that would be an extremely nice sign to actually set that higher low on this daily and allow the next break testing the highs coming in over 1840, which right now we're looking at 1846 and 1846.77. So 1846 is going to be our high trend if we can in fact hold the zone from 1720 down to about 1680. So still know that sell-offs and retracements are a normal part of financial markets. So even if we do get a little bit of slippage, the big thing is just defending those big support zones and then being able to follow that up with continuation to break out of not only that trend line, but as well as those price highs as well, because otherwise we are still at risk of further slippage to the downside if in fact we can't meet those targets. But as always, would love to know everyone's thoughts and predictions down in the comments sections below. With that, though, that is going to go ahead and wrap up the show, and I do thank you for sticking with me to the end. If you enjoyed the show and found value of it, please hit that thumbs up, like, and subscribe if you have not done so just yet. Do appreciate all the continued love and support. As always, it does mean so much. Stay safe, take care, everyone, and I'll catch you back in the next video.